Hello and welcome to the latest Insider interview. Our guest today is Charles Jillings, manager of the Utilico Emerging Markets Trust. Charles, thank you for coming into the studio.
Good afternoon.
Could you give me some background on what your investment trust does? Where do you invest and what do you invest in?
So we are a London-based investment trust listed on the London Stock Exchange, and we invest in emerging markets. So that would be Latin America, Asia, Eastern Europe, a bit of Africa. Maybe we can come on to why not more. And we're invested in predominantly listed companies that give us, if you want, a degree of insight into how they govern themselves. And we're invested in operational entities for the main part. So they're up and running an airport, running a toll road, very often expanding, and that's the sort of real opportunity. And then we're focused on infrastructure, so ports, airports, toll roads, but not necessarily the users of it. So not airlines, not shipping lines. We like the underlying asset. We're investors in utilities, so power, water and gas. And we're investors in what I would loosely call communications, so mobile phones through to satellite mast data centers at the moment, a reasonable part in the portfolio.
So communications, utilities, infrastructure.
Correct.
Across emerging markets. Why is that an exciting area to invest in?
Two things. One, they're growth markets. They fundamentally have growth in them. And sometimes I think you can get lost in GDP. So if you looked at Brazil and you looked at, say, Horizon, which is one of our investments, the Brazilian government passed legislation that basically said they wanted to achieve 90% waste collection, sewage collection. They're way behind. And so that's a real driver for that sector. And Horizon is a leading player in it, and therefore your growth opportunities are quite high. I think the other factor is just raw GDP. However you add it up, the emerging markets are growing, and our assets tend to be GDP linked. So if you looked at power generation, it tends to be GDP plus. If you looked at even containers, what happens with the container port is the port sucks in more and more containers. And if you want somebody shipping a quarter of the container, when they come to 2, 3, 4, they go into the port. And therefore the port growth rates tend to be stronger. And those are the aspects that make it exciting.
And what is the typical geographic split across your investment universe? Are you finding more opportunities in Latin America or Asia or Africa at the moment?
So the simple way to answer it is we're bottom-up investors, so it's an outcome. Obviously, I sit across the top. I've got 3 senior analysts, 2 of whom are portfolio managers alongside me. And they look after your utilities, infrastructure and communications. In order to, if you want, generate the opportunity, they will put forward ideas and we discuss them, and we make a reasonably collective decision. Ultimately, at the moment, I make the final decision. So it's an outcome, but we pay attention. So we're not going to end up all in airports, and we're certainly not going to end up all in one country. If you look at us over time, plus minus the sort of boundaries are about 20-24% in any particular industry, and about 20-25 in any country. That said and done, Brazil's been up historically over 30%, but we do try and pick the opportunity that gives us diversity.
In emerging markets, the shares are often quite volatile. You also have lots of currency risk, but you're investing in these more stable, predictable parts of the investment universe in a volatile area. So how would you categorize the fund? Is it lower risk or higher risk?
So, and it's a number which people talk about. If you look at the beta of the fund, it's under 0.9, so that would tell you there's a reasonable stability in what we're investing in. If you look at the outperformance we're achieving, it's because we are clearly selecting the right investments, which is giving us that alpha. It is volatile, but I think you can play or it's an opportunity if you want, because we'll remain fully invested, and that's one commitment I sort of make to all shareholders. We're not going into cash. Yeah, that's not our job. Our job is to find investments. If a shareholder wants to go into cash, they can sell in the market. Having said that, it's then a challenge to get into the portfolio because we've got to sell something out of it, and it's relative opportunity at the time that we add investments. And what I would say is we usually say we'll sell this at X and we'll buy that at Y. It may take us 2 weeks, it may take us longer, but we'll stick with the levels we've set unless there's a reason that needs to be changed. But over time, they get filled. And it surprises me that, if you're patient, you can actually pick up some really, really good starting position.
Can you talk me through the investment case for some of your top positions?
So if you looked at something like ICT, which is an international container operator based in the Philippines, fabulous management team. The one thing I'd say about all our investments, absolutely fabulous management teams. Two things really matter: management and governance. If those are strong, then they can out the opportunity, and we won't be surprised along the way. ICT's been in the portfolio since the beginning. And if you look at them, and they're classic, a year to December, I think their container growth was 7%, their, if you want, revenue growth was 14, their EBITDA was 23, and the earnings per share were 44. It's a leveraged outcome. And that's really exciting. They're a very disciplined management team. They understand, if you want, both the opportunity but also the risk.
Are there any other examples of companies we can talk about?
Talk about Horizon, which I mentioned earlier. Horizon is an operator of 15 waste sites in Brazil, and I've just been out to Brazil and actually went to see one. And when you see them on the ground, you get a sense of both scale but opportunity. Since this law's been passed, they've assembled a fabulous portfolio of assets, and they get the majority of revenues from waste collection and if you want, putting it into waste sites, but they're adding incrementally the biogas, they're adding incrementally the sorting, and they're even in a position to sell, if you want, the carbon credits into the European market. So if I look at the revenue streams which are coming from improving their operational activity, and if I look at the assets that they have and the assets that they can buy, there is significant upside here. Fabulous management team came away with, this is a real positive.
You said there that you travel around a lot. You went to Brazil recently. So how important is it to go out to the companies that you invest in? And what do you find that you're learning at the moment?
So essential to travel. I think you can read a lot, and once you've got an investment and you've got a relationship, you can certainly maintain it. But what you can't do is understand how the environment is changing around them, understand, if you want, how the local population is looking at and using the opportunity. So we traveled to Latin America in February, March. We traveled to Asia in about November, and we go to Eastern Europe in June, July. Concerted effort. All the teams go, we break up, we try and cover all the companies, and then, build on that knowledge base. So this time, just been to Mexico, Chile, and Brazil. And to give you an insight, in Mexico, we went to Monterrey City. I was really interested in trying to understand nearshoring. Is it a topic? Is it a real outcome on the ground?
Can you define nearshoring for us, please?
So if you want, the tension between the USA and China is causing a lot of corporates, and COVID for that matter, causing a lot of corporates to shorten their supply lines, look for alternatives, reinforce them. And while China used to be the biggest exporter to the US, Mexico is now the biggest. And what's happening is the US corporates are supplanting business into Mexico. They're not, interestingly, they're not taking it out of China. China remains a massive opportunity, but they are putting it in there in order to service the US market much more efficiently. And so we went and saw some warehouse operators. And, you know, usually when you see a warehouse operator, you ask about vacancies. You know, how efficient are they? Are they running at 90%, 95% occupancy? They were all running at 100. And it was extraordinary to see. There's a sheer demand because people are looking to place production into Mexico. And I don't think I would have walked away with a sense of energy and drive. You would also probably have missed the one challenge or the headwind, and the headwind is energy in Mexico. You know, Mexico is short energy if it is going to properly exploit this opportunity. So a lot of the discussion was around how you're going to solve that. In the short term, it might be a challenge, but long term, hopefully they will, and Mexico will properly benefit from it.
Charles, thanks very much for coming into the studio.
Thank you very much for having me.
And that's all we have time for today. You can check out more insider interviews on our YouTube channel, where you can like, comment, and subscribe. See you next time.